I hear what you're saying, and in theory, I understand it. And if you want to see this market broadening out, yeah, that kind of makes sense. Except that the NASDAQ and the S&P continue to be better stock pickers than most of us. And this is a market that is being whipped around all over the place at the moment, and it's hard to follow the narrative. Why do you want to take the risk with the nicer parts of your sandwich on some of those whippy kind of narratives that we're seeing? I'm mixing all kinds of metaphors and all kinds of things.
Eating salads or sandwiches?
But you get it.
Let's just decide on that
salad. I think, well, you have to think about the macro, right? Like, you have to think about where interest rates are headed, where the market thinks interest rates are headed, and that has been the thing that's been whipping us around. I kind of always thought that Q4 was going to be a good market environment, and then I did think that this quarter was going to be tougher because earnings are going to, it's going to be tougher for some companies from an earnings perspective. I think earnings expectations are too high, especially for the second and third quarters of this year, and those expectations have to come down. I also don't think that the Fed is going to pivot as quickly as the markets might be thinking. And as a result, you have to think about those things. But there are some really good stories out there. If you look at the consumer discretionary sector, without Amazon, it actually would have had negative earnings. But I think the inventory destocking stuff that has been happening, I think that's bottoming. Healthcare, from the COVID winners, from that perspective, those without them, healthcare actually would have been a lot better last year. And so I think we are getting into this point where some stuff that hasn't done well before will be bottoming.
Have we already seen that play out? And I'm just talking about small caps in particular. We've clearly seen a lot of money come into that in the back half of the year. So, like, have we front run that too much? Like, is everything too awesome in that kind of rotation?
I definitely, in December, I was like, everything's priced for perfection. And in the small cap space, you've got a lot of industrials and financials, and I'm not sure that they're gonna do that well in the first quarter at least. So I'm definitely watching the small cap space, and I put a little my own money in December in it, but it was a trade, not necessarily investment yet.
Stephanie, taking another step back, don't I just want to buy stocks and then buy bonds and hope that they kind of counterbalance each other? This is the other trade that in some ways is weird at the moment. Stocks, volatility is very low. The market's kind of bouncing around trying to deal with lots of narratives. It's really hard to pick winners. But then you've got the added complication as well of the fact that the bond market is not acting as the counterweight that it once did or should maybe. Does that reassert itself this year? And does that in some ways make the stock decision an easier one? I can be a bit bolder in stocks because maybe the bond market is helping me out.
Well, we've definitely seen bond market vol be much higher than the last decade or so. And you've seen stock vol probably be too low last year, especially towards the end of last year. I think this year, the 10-year will probably stay around the 4.5% mark. I do think the Fed will cut maybe around 1% this year by the end of the year. It's a little higher than they said, but a little less than what the market's pricing. And because of that, I do think the market will end up kind of, coming together from where the Fed is, and bonds will end up being a little less volatile. Although if you look back in longer term history, bond volatility that we've seen is actually more normal, and I think it was toned down quite a bit by quantitative easing and the Fed for a long time. So it's actually, I think it's us, just the whole market getting used to bond volatility being a little higher. So for certain portfolios, you could still hold bonds and earn your coupon and probably still have less volatility than the stock market, but I'm still a better buyer of stocks than bonds, kind of for the entire year.